as we enter a more multipolar world, and I think that we kind of have a long-term sovereign debt crisis in much of the developed world. That I think is going to play out over a longer period of time. I think gold is kind of an interesting hedge in that sense. I think in general, Bitcoin is now a kind of a superior alternative in a lot of ways. And so I'm more active and interested in the Bitcoin space. I do some venture capital work there. I kind of work with some startups, and I provide a lot of research for that space. So I generally prefer that, but I still use gold as a diversifier.
Renowned financial analyst and investment strategist Lyn Alden has expressed her belief that the shifting geopolitical dynamics will greatly benefit two assets, Bitcoin and gold. In a recent interview with Stansberry Research, Alden referred to gold as the preferred asset of central banks, while Bitcoin is gaining traction as the favored asset among retail investors of various age groups. Alden predicts another bull market for Bitcoin within the next 3 to 5 years. Although she anticipates a short-term liquidity crisis in the United States, she expects more investors to turn to Bitcoin for diversification, particularly with the upcoming halving event and ongoing economic challenges. Looking ahead, Alden foresees even central banks shifting their focus to Bitcoin and away from gold. As the world undergoes alliances and narrative changes, Alden asserts that winners will shape the next era. Presently, countries with the upper hand, such as the BRICS nations and strengthening alliances, are favoring gold and accumulating it in record amounts. However, experts suggest that gold's long-term use cases may be limited, as central banks are likely to diversify into Bitcoin, which exhibits stronger fundamentals, especially in the long run. In the Stansberry interview, Alden also delves into the rising popularity of artificial intelligence and the intersection between cryptocurrencies and AI.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
So, it's been in this decade where it got very over exuberant, about a decade ago. So, if you go back to say roughly the year 2000, gold has roughly kept up or outpaced the S&P 500, which is pretty impressive. But all those gains were during the 2000s decade. So gold went from, under $300 an ounce to nearly 2000 an ounce. It just crushed almost everything else. And then it's been in this kind of bear market, sideways market for over a decade, and has obviously given up a lot of that advantage. Ever since the global financial crisis, we've seen a shift from central banks where, for a multi-decade period, they were reducing their gold tonnage and investing in things like treasuries instead. And it was like this, this kind of downward move. But then with the global financial crisis, you had like a V-shaped recovery. And you started to have increasing gold tonnage among central banks.
Bitcoin at least keeps up with gold in almost every category you look at, and I think it actually is superior in many of them to gold.
The next 6-12 months are very uncertain because of liquidity issues we discussed before. But when I look out 2 to 3 years, I think it'll have another significant bull cycle. And that's also one of the investments that I think I intend to hold it for over a decade more. Yes. I think it's a play that goes on, and there's very few things that I think could change that thesis. But as long as I continue to hold that thesis, I think that's going to be one of the better performing assets out there. I think there's still a window in the next 3 to 5 years where gold could do well. I think we're in kind of very uncertain times right now. And so the way it's kind of shaping up at the moment is like gold is like central bank money and Bitcoin is like people money. Money for the people. And there's still this dynamic where Bitcoin is not really big enough for central banks to at least large central banks to really care about. And so I think there's this window here where gold's interesting, but I do think that Bitcoin is going to be the better performer over most cycles, for at least for investors that can withstand that volatility and that are willing to do time to research it and understand exactly what they own.
The last, obviously, 4 to 6 weeks, it's been in the AI boom. Do you see this as a bubble, or is this something that has legs for many, many years to come?
I think it's real. I think it's going to be a long-term transformative thing. As you point out, AI has been with us for a while. I mean, the chess programs have been beating the best human grandmasters for 2 decades or more. And it used to be you need a supercomputer, then you could do it with a desktop, and then now you can do it with a mobile phone. So the amount of, the processing has gotten better there. I think that obviously the key thing here is that technology often works in stepwise changes. So people often think of it as like this exponential thing, but usually you hit some sort of breakthrough that opens up this whole new thing. And the example that say Michael Saylor's used, because he's an aerospace engineer, is human flight. So for thousands of years, no progress basically. Then you kind of dabble in balloons for a couple centuries, but really it was not until we could produce both aluminum and hydrocarbons, and that combination in a few decades, then we're in space, right? It's amazing how quickly things took off once you had a couple key pieces come together. Same thing for, electronics. Like once electronics could make a workable smartphone, the amount of innovation that came out over the next decade was incredible. And so I think AI kind of hit a moment where it can now be inserted into far more things, and the pace of innovation can pick up. And so I think to the extent that it's a bubble, I would say that investors should still watch out for valuation. I think they should still have realistic expectations. They should still manage position sizes. And I mean, a good analogy is the dot-com bubble in the sense that most of the promises of the internet in the 90s were true. I mean, the internet dramatically changed every facet of life. And yet many of those were not good investments for 5, 10, 15 years because they were just extraordinarily overvalued. And it was hard to know which ones were going to be the true winners from that era. So I think that AI is in many ways hyped right now. Stock prices that have like screamed vertical, I think might go through a period where they kind of have to grow into that valuation a little bit. But I think that the long-term trend is clear.
Artificial intelligence has undoubtedly emerged as the next major breakthrough, as evidenced by significant events over the past year, including the recent NVIDIA stock boom. NVIDIA, a leading tech company based in California, has achieved a remarkable milestone with a valuation of $1 trillion, highlighting its dominance in AI technology. According to Alden, large-cap companies like NVIDIA and Microsoft will require time to grow into their valuations, but the long-term trajectory for AI remains clear and robust. Alden also believes that other areas of AI have untapped potential. She cites Adobe as an example, stating that AI makes their products easier to use while enhancing their power. Furthermore, Alden suggests that certain sectors, such as energy and commodities, are safe bets that won't be significantly disrupted by AI. In fact, she anticipates these sectors to experience substantial growth in the next decade. Here are additional excerpts from the interview, shedding light on Alden's insights into the AI landscape.
And then outside of AI, going back again, I think energy and commodities, after being a terrible investment in the prior decade, are going to be a good investment in this decade. And another thing I ask about AI is like I flip the question upside down. So what benefits from AI, but also what won't be disrupted by AI, right? So sometimes investing is a negative sum game, which is you want to make sure that what can damage your thesis. And so I kind of, as I look through a portfolio of companies, I say what things might face severe headwinds from AI, and I don't think AI is going to negatively impact these energy or commodity or infrastructure markets too much. And the reason for that is that for decades now, humans have overestimated how much technology will change in the hardware realm. So we thought we'd have better space flight by now. We thought we'd have flying cars by now. We thought we'd have robot assistants by now. We tend to overstate that. And it's actually really hard to do all that because it all has to interface with the real world and deal with maintenance and deal with entropy and all that kind of stuff. Whereas we tend to underestimate how much software and electronics are going to change the world because it's got more of a boundless and frictionless growth potential. And so I think AI is going to be similar to that, where over the next decade, it'll radically change a bunch of things about our digital lives and the way we interact with digital products and digital environments, things like that. But I think that we're still going to have a significant need for commodities and energy and infrastructure, and that this is underinvested in. And so I think it's one of those areas that is not going to be heavily disrupted by it. And so I in a lot of ways, I have a barbell approach where I'm always looking for long-term growth stories, whether it's Bitcoin, whether it's some of these software programs that could benefit from AI and become more accessible, that kind of thing. But then on the other side, I'm saying, okay, what is completely left for dead, underinvested in, trading at single-digit price to earnings ratios, but super profitable and going to be with us for a long time. And that's where I'd point towards those energy, commodities, infrastructure type assets. I also think there's an intersection between AI and Bitcoin in the sense that people have been talking for a while about micropayments or machine-to-machine payments, or human-to-machine payments or machine-to-human payments, and we're actually seeing really early signs of that. So, the existing money system has all sorts of frictions. It has global payment frictions. For people that send payments globally regularly, you run into more frictions than just domestically. You can't really do microtransactions because there's like a minimum threshold for how big payments have to be. Like for example, like payment services will charge like a 30-cent minimum fee, which means sending anything under a couple dollars doesn't really make sense. You can't just pay 25 cents for an article to read online, for example. And with like say Bitcoin, Lightning Network, and other sort of scaling solutions, it opens up real-time micropayments. And because it's open source, it also means that AI can actually use it without anyone's permission, right? And AI doesn't have to go get a bank account. Instead, they can, there's already been cases where creators will give an AI agent a small Lightning balance that they can pay. If they have a task to do and they say, okay, I have to do step 1, 2, 3, 4, 5, 6, and they find out that step 4 is that they could use a certain API, or they need beefier processing that they can rent. They can actually spend that on completing that step of the task. And then you can imagine maybe a couple of years in the future that gets done by accident. Maybe someone says, I need you to do these 10 steps, or I want this outcome. And at one point along the way, the AI realizes that money would be useful to it. And so it either asks and says, well, I'd like some money to go buy this, or it could go out and earn it. There's ways that you can. It's open source. You can spin up a wallet. You could post content on Nostr and get tips, and people don't even know you're an AI. I mean, it's kind of far-fetched, but not really. And so, open source money is inherently just more ready to use for various agents that we automate, including automated, funding. And so I think you could have an environment where there's human to machine payments, there's machine to machine payments, there's machine to human payments. It's just kind of a more part of our automated life, which includes the transfers of monetary value, which is not always between humans. And it doesn't mean, of course, that AI has to be like sapient. I'm not talking about like super sci-fi stuff. I just mean agents that are programmed to do something fairly sophisticated, and that using products or services in a digital way is an important part of their process, and they have basically a budget.
Lyn Alden's outlook for Bitcoin in the short term leans slightly bearish due to the projected impact of the U.S. economic crisis on the leading cryptocurrency. Experts suggest a high likelihood of the United States heading into a recession, similar to what is already occurring in Europe. If this scenario unfolds, especially if accompanied by a liquidity crunch affecting multiple sectors, Bitcoin and the overall cryptocurrency market are expected to face negative consequences. However, Alden's bullish case for Bitcoin in the mid and long term is driven by the asset's robust fundamentals. Despite some looming challenges, the future appears promising for Bitcoin and its investors. We invite you to share your thoughts on Lyn Alden's interview by dropping your comments and observations in the section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.